Keep calm and carry on buying AI tech stocks as they deviate from the highs. Where the greater the deviation, then the greater the buying opportunity presented. Keep calm and carry on buying. Quantum AI tech stocks. Fed plunge protection team halts stock market crash in its tracks, sending stocks sharply higher late Monday ahead of this week's Fed meeting. So there I was, eagerly anticipating the bear signal for a potential stock market waterfall event on break of the S&P to a new bear market low, which happened. The S&P broke to a new bear market low. Jeronimo or Jerome Powell. The S&P was off to a quick rendezvous with probably 3,900 and lower over subsequent days. Instead, what happens? Jerome Powell was having none of it and pressed the red button, the big red button on his keyboard, and the stock market did a swift 180, which actually happens a lot, with the first such event being on the morning after the 1987 crash, when the Dow futures were trading sharply lower after Monday's 500-point drop ahead of the open, but instead the stock market opened sharply higher. It just rocketed higher from the open, which was not in the futures because I was trading it on that day. Futures were 200 points lower, but the stock market opened up. And so it was this Monday as well. The PPT stepped in once more to prevent a stock market waterfall event ahead of the Fed meeting. Yes, the Fed wants this bear market to continue because it will help moderate demand through destruction of consumer wealth, thus make them feel and be a lot less wealthy, all towards achieving the Fed's objective of curbing inflation, which is out of control. So they're going to destroy wealth in the stock market to some degree to curb inflation, but they don't want to do it with a crash. Hence, what they did today. What would happen if the stock market crashed? Well, you're going to have politicians raising their eyebrows during midterm elections, and that's not going to, the Fed doesn't want any of that, or the US Treasury Secretary and the SEC, all members of the PPT. Hence, the Fed, in a blatant act of market manipulation, which has done, $9 trillion worth of manipulation on its balance sheet, halted the crash just as it was about to begin, timed for maximum effect, where what would have been deemed to have been a strong bear signal went up in smoke, and thus sows the seeds for a "don't fight the Fed" temporary rally. It will be temporary. Whilst my latest full spectrum in-depth analysis that took me a good 3 months of hard work, stop and go, but 3 months, is on the UK housing market that maps a trend forecast out for 3 full years into the future. Can the UK continue trending higher, or will interest rate hikes halt the housing bull run? All and more is revealed in my extensive UK housing market analysis and concluding detailed 3-year trend forecast. That will soon be followed by my updated US housing market trend forecast after my existing 2-year forecast recently concluded that once more aims to project a trend for US house prices at least 2 years into the future. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month to gain access to all of my recent analysis on accumulating AI tech stocks at defined buying levels as and when opportunities arise. There's none of this waiting for the indices to drop, because there's a stealth bear market in progress that cycles through individual stocks like a Tasmanian devil. You saw last week. Did you see what happened to AMD, TSMC? And Qualcomm. That's the Tasmanian devil. Indices, not much changed, but you got new lows in Qualcomm. TSMC and AMD. So to gain access to all of my recent analysis on accumulating AI stocks during the bear market of 2022 that I forecast to expect as of September 2021, and then confirmed in my analysis of 5th of December following the CI18 trigger. That's a crash trigger that has a very low frequency. It occurred in February 2020 and it occurred again in December 2021. Warned of significantly lower prices ahead, which has come to pass, which is presenting myself and patrons with huge opportunities to accumulate target AI tech stocks at deep deviations from the highs. You know the motto. The greater the deviation from the high in good stocks, then the greater the buying opportunity being presented. Whilst here is my schedule of both in-depth analysis and market briefs, though they're not really brief, because I have a tendency to do mega pieces. So my briefs are other people's essays. So again, consider becoming a patron by supporting my work for just $4 per month to capitalize on the stock's bear market and what I strongly expect will soon follow it, as we ride the inflation megatrend courtesy of central bank and government money printing on an epic scale. I've been warning of high inflation is coming since March 2020. You don't believe me? Go check my videos. Every video ends with a warning that big inflation is coming. You should prepare for it. Well, big inflation has arrived, and it will last the whole of this decade, no matter what they say. Big inflation will be with us for the remainder of this decade. Yes, there'll be dips down to maybe 4%, but you're not going to see 2%. Not unless they change the CPI measure, edit everything out that goes up and just leaving the little bits that fall because of deflationary forces. The fiddle, you do realize CPI is fake. The real inflation rate is double CPI. 8%, real is 16%. Go back and use the measure that they were using in the 1970s and early 80s. Use the same methodology, and US inflation is 16% now. UK inflation is at least 15%. That is CPI. So subscribe to this YouTube channel for new videos, and do consider becoming a patron by supporting my work. Just $4 per month as we ride the quantum AI megatrend into the future.